Welcome to your channel, Your First Mortgage in Canada. Disclaimer, for educational purposes only. Get up-to-date info by a professional. Down payment basics. Ready to buy your first place? Let's break down what you need. Under $500,000, you need 5% down. Between $500,000 and $1 million, it's 5% on the first $500,000, then 10% above that. Over $1 million? You need 20% down, no exceptions. Buying a $400,000 condo means $20,000 down. The bank checks 90 days of statements to confirm it's your money, not borrowed. Parents helping? They'll need to sign a gift letter. Less than 20% down means you're getting a high-ratio mortgage requiring CMHC insurance. This premium, 4% at 5% down, 3.1% at 10% down, gets added to your mortgage amount. Closing costs. Budget 2 to 4% of the purchase price for closing costs. That's $8,000 to $16,000 on a $400,000 home. This covers lawyer fees, $1,500 to $2,000. Land transfer tax, varies by province. Ontario, first-time buyers get up to $4,000 rebate. Home inspection, $300 to $600. Appraisal, $300 to $500. And home insurance, $800 to $1,500 yearly. Keep an extra $3,000 to $5,000 for immediate needs like changing locks, appliances, and inspection repairs. Income documentation. Traditionally employed? Bring your last 2 to 3 pay stubs, T4s from the past 2 years, an employment letter, and CRA notices of assessment for 2 years. Self-employed? Provide 2 years of tax returns and financial statements. Banks use your net income to qualify you, so it's often lower. Expect to put down 10 to 20% and show at least 3 to 6 months of job stability. Credit score and debt ratios. Minimum credit score is 600, but aim for 680 plus to get good rates. Check Equifax and TransUnion before applying. Don't apply for new credit 6 months before your mortgage application. Every inquiry dings your score. The bank uses 2 ratios, GDS, gross debt service. Housing costs can't exceed 39% of gross monthly income. TDS, total debt service. All debts can't exceed 44%, making $70,000 yearly. Your GDS limit is $2,275 monthly. TDS limit is $2,567. Mortgage types. Fixed rate mortgages lock your rate for the term, usually 5 years. Your payment stays the same, great for budgeting. Fixed rates are slightly higher than variable. Variable rate mortgages fluctuate with prime rate, usually 0.1% to 0.4% lower than fixed, but you risk increases. Stress test. Since 2018, you must qualify at your rate plus 2% or 5.25%, whichever is higher. Getting a mortgage at 5.5%, you qualify at 7.5%. This ensures you can afford payments if rates rise, but reduces borrowing power by 15 to 20%. Terms versus amortization. Amortization is total payoff time, usually 25 years. Term is how long your rate locks in, usually 5 years. After your term ends, you renew at current rates on a $380,000 mortgage at 5.5%. 25-year amortization means $2,330 monthly and $319,000 total interest. Shortened to 20 years, and you pay $2,610 monthly, but only $246,000 interest, saving $73,000. Even $100 to $200 extra monthly saves years and thousands. Document checklist. Bring ID, SIN, recent pay stubs, T4s, notices of assessment, 2 years, 90-day bank statements, employment or gift letters, and a list of debts. For properties, include the MLS listing, purchase agreement, property tax info, and for condos, a status certificate with fees and reserve details. Brokers versus banks. Banks offer only their own products, while brokers, paid by lenders, compare multiple options to find the best fit and rate for you. Pre-approval versus approval. Pre-approval is conditional commitment, valid 60 to 120 days, possibly locking in a rate. Full approval happens after you make an offer and the lender reviews the specific property. First-time buyer programs. Home Buyers Plan. Withdraw up to $35,000 from RRSP tax-free, $70,000 for couples. Repay over 15 years, starting 2 years after withdrawal. First Home Savings Account, FHSA. Contribute $8,000 yearly, $40,000 lifetime maximum. Contributions are tax-deductible. Withdrawals for home purchase are tax-free. Many provinces offer additional programs. BC has 5% interest-free loans. Ontario has land transfer tax refunds. Final advice: get pre-approved before house hunting. Work with a mortgage broker. Use RRSP Home Buyers Plan and FHSA. Budget ongoing costs. Property taxes, $200 to $400 monthly. Insurance, $80 to $150 monthly. Utilities, $250 to $400 monthly, and 1% of home value yearly for maintenance. Open a separate savings account for home emergencies and build to $5,000 to $10,000. Think long-term about space needs and location. Don't overextend. Being house poor isn't worth it. Your action steps: check credit score on Equifax and TransUnion. Gather documents, calculate debts and income, research first-time buyer programs, talk to mortgage brokers. This is one of your biggest financial decisions. Take your time, ask questions, and understand everything. You've got this. Thank you. Merci. Miigwech. Supported by lalibertymedia.com, an Indigenous Company.